howdy, and welcome back to Barrel Hitch Trading for two nights, November 25th, 2025, Monday, Wednesday, Friday, post-session recap. And it'll look a little bit different today because I recorded it once and forgot to have the microphone turned on. So we're just going to cover it. You notice that was the disclaimer, and then we'll walk you through here what's going on. So you can see 3 for 3 today down at the bottom right, all longs. 15, 11, and a 4%. Average return per trade for the day, 10.34%. So another pretty good day. Looking at what we had going on there, 3 trades. You can see the first at the bottom, last at the top, and those are in Eastern time. And so then going back over to the left there, you can see as we go around, there's first trade coming off the ADMA with that good inflection point curving up. And today is funny because I'm actually exiting on the inflection points in favor of. Like I said, those are just there to give me a little information on some internals of the bars, but I trade the shape that I see. So I saw the curvature coming off the ADMA and right into the trade there going forward, and then just take that early run and get out. 15% in 13 minutes, can't beat that with a stick. Second trade is going to come right after that. You see that again, emphasizing the curvature there. Looks like I rambled a little bit on that one. But the whole point, right, on an uptrend day, you can see the VWAP there, the EMAs are above, but then it bent back over not too long after I got out. And that's actually where I entered the second trade. Why? You can see that curvature flattening out again right at the ADMA. So trading the shape of the waveform, the curve, that's what I see. So that acceleration shifted again, pulling back on the stick a little bit, and I'm in. Now this one is also a little bit interesting though, because you can see they pulled back on the stick, but only enough to level out. Why did I stay in? The structure is still there. It's still bumping along the ADMA. At the bottom left, you can see that's the VOLD at the top left, the VIX at the bottom right, the tick at the bottom left, and the AD at the top right. But you can see the AD up, the VOLD up, and the VIX down. Those all three are in favor of upward pressure at the moment. So rode it along. I was in that one pretty long for me, 23 minutes. But you can see where it's just sitting there, and then boom, when did I get out? Right on the burst. Curvature turned in favor where they're pulling back on the stick a little bit harder, and I'm out again and again on a Hitch kicker signal in favor of, right? Why? Quick, fast, nimble, get in, get out, right? I was already in 23 minutes, captured 11%. That's good, let's go. Plus you can tell it's not a wild up and down day, right, in general. And so capture that first burst, get out. If it keeps on going, great, who cares, right? You got your little bite at the apple. And going there along the third trade, you can see same thing. I was right back in at 1033. And again, a long trade for me, 27 minutes. So you're seeing a couple of aberration days in a row really for me. But it bumps exactly same idea, right? It flattened out, right? Riding right along the ADMA. It doesn't violate that structure at any point. And then boom, pulls back on the stick, accelerates. And again, I'm out on the kicker signal in favor of the trade. So that really is what the day looked like. Again, you can see down over there, they're all 3 calls. That will not always be the case, even in an uptrend day. The other week, I had a downtrend day where I was 2 calls and a put, 3 for 3, right? And you look at the chart for the day, and it looks like falling off a mountain. Why? I don't care. Up, down, middle, in between. I trade the shape, not the story of the day, not news events. Again, I will stay out on news events, big ones that are scheduled, but that's basically how it goes. So it's the acceleration change, the inflection, the curvature of the move, the structure of the trade. That's what those EMAs and VWAP are there for. And then keep it simple, get in, get out, take your wins, take the money and run, right? Any of the structure goes against you, that's when you get out. In favor of, winner, loser, you get out when the structure goes away, right? One trade at a time, risk and execution discipline. One trade at a time, 10% capital allocation, no margin, done when the structure decays. So that's it. If you like it and want more of these videos, then go ahead and subscribe. Feel free to comment, give it a thumbs up, whatever you want. It's just a community, just a journal of my action.